Good morning. Overall bearish market conditions still on the S&P 500. We've got majority bullish with a 10 and 4 on the trend condition on the daily time frame. On the 1 hour time frame, we've got majority bearish 14 on S&P 500. If we look at futures this morning, you can see that there is a resistance zone right here around that 6,000 range on S&P 500, and running into some of that resistance, we could see some acceleration as we get some of these counter trends back in, run into that resistance area. We'll see how that looks on a shortened week this week with full market activity today, half day tomorrow, and then nothing on Wednesday. The most bearish on the setup is currently on the breadth of the market. Number of stocks above the 50-day moving average is sitting at 25. So you've got 75% of S&P 500 that is under the 50-day moving average, which is a bearish overall. You can see kind of the oscillation of that time frame. We're towards the bottom end of that range, which could create an area for some bounce right here, but we're not deeply oversold enough. We're at an area where we could see a bounce here, and then this support area here, but we've kind of ticked down below that. It can get all the way down to that 10 number in some of these deeper areas, but that overall trend is still in place for that indicator. We're also seeing VIX continuing to show some bullishness. Had a big run up here. Immediate retracement based on some of that inflation data that came out on Friday, but we'll see if that holds up. If we get that reversal, that was a pretty strong move up that first day, and then Friday just a pullback. So some volatility happening here for sure. Let's take a look at the bond market, the long end of the yield curve here with the TLT. Let me just squeeze that in just a little bit so we can see that current trend still in that downtrend for that time frame, and majority bearish on the trend condition both on the 1 day and the 1 hour. That's for the long end of the yield curve. Short end SHY, we've got a trend contraction right here, working on a possible expansion out of this. We'll see how that ends up developing as well. A couple other things that I'm going to start going through here, not today, but we'll add in. This is the bond yield curve. We'll add some additional analysis there. And then this is the 10-year Treasury. So we haven't looked at those rates themselves and the price pattern of the rates. We've mostly been looking at the direction of the bonds. So remember that when bonds are going down, like TLT is moving this direction, then interest rates are doing the exact opposite. Interest rates are going higher. So we're seeing momentum accelerating to the upside on the 10-year. And again, this is some of the concern that the market's going to have as far as inflation and higher interest rates for longer, which the Fed has now indicated that's going to be the case this next year, what that looks like for the economy. Let's jump over and take a look at some of the overall sectors, continuing to see that weakness in sectors across the board. What I want to look at is to see if we're getting any extreme areas where there could be some bounce. All of these are going to be very similar to the S&P 500. I shouldn't say all of them, but some of these ones that are like technology, obviously similar to the triple Qs, and industrials like this one here, similar to the DIA, the Dow Jones Industrial Average. Seeing some weakness here, 7 and 7 on that. On the iShare, industrial iShare, consumer discretionary also, kind of at the upper end of that range. We talked about that. When you have this expansion of trend, then it's going to work its way back into contraction or back into consolidation or contraction or compression right here of trend. Pretty strong, one of the strongest sectors so far this year. Getting a little bit of softness at these levels. We're seeing, again, industrials starting to weaken or continue to weaken as they've had a pretty nasty 2-week stretch, and energy weakening has continued to weaken in that bearish overall majority bearish trend on energy. Most of the rest of these bottom sectors continuing to be bearish. And again, that's just adding to the overall weakness of the S&P 500 as a whole and the market as a whole. It's been holding up, but we're getting a lot of these areas of the economy, different sectors that are in downtrends or accelerating to the downside across the board here. Basic material continuing to show that weakness. Once we start to get extreme to the downside and you're really getting this fanning, you're going to get snapbacks along the way. But the fib level right here is is connecting to the swing high, swing low of the time frame. Just like we would be looking for momentum on the upside, we can start to see areas of momentum to the downside, this 236 range. This kind of becomes that counter trend playground area to see if it's going to rally back up and then ultimately continue that downtrend. This is an area that could be a shorter term magnet if we do get a bounce from some of these extreme areas. You can see that 1 hour time frame, a little bit of change starting to happen right there on basic materials. And let's jump over and look at the consumer staples, also bearish. Continued that majority downside. We're also seeing transportation majority bearish. Most of these still get majority bearish to the downside. Let's jump over and look at commodities USO, which is really neutral in that daily time frame, but holding up, where we're getting a little series of potential higher highs here and then potentially one right here. If that area could hold up, you're seeing that on the 1 hour time frame, a shift back to majority bullish on that 1 hour time frame. So oil working its way back into a bullish trend. Gold also trying to hold up right here. It's got this 1 hour time frame, which has been pretty bearish. It's got some work to do to try and find some support currently at these levels. You're getting some compression at the top end of these trends, but they are also starting to show some weakness as we've been seeing some strength in the dollar. And again, the idea that the U.S. economy may be strong or strengthening and dollar gets weaker, gold sells off, markets move higher. And we'll see if that trade continues to pan out or if we are seeing some overall weakness here. Silver also getting some weakness. Let's actually jump over and look at a couple of stocks to consider today. And let me just pull in this little different perspective here and move this over. And we want to come back and take a look here and then pull in the screens that we've got to the first one, which is RCAT. Nice confirmation here. It's going to move higher pre-market. It's got a gap happening here also. And the other one that I wanted to take a look at, there's several actually. Carnival Cruise, CCL, which is given a good confirmation bar, massive volume on that day. Carnival has been, a pretty interesting stock over the last few years to see how well it's been performing, all things considered, even going back to pandemic. And the other real trade that I wanted to focus on was RBBN. A nice pattern in the momentum zone, 2 days of big volume right here, and a real tight compression on the 1 hour time frame of trend, and nice support right here. So we'll see if we see any type of follow through or breakout on RBBN. That'll do it for today's update. Everyone have a fantastic day today.